All right, V, what's your last name?
Elmazaj.
Elmazani? Okay.
Elmazaj.
Elmazaj, okay.
Yes.
Okay, with me is V Elmazaj. She's a TV star. Okay. V, tell me, how long have you been with Angelo?
3 years.
3 years.
Yes.
What made you join Angelo?
Well, my manager, John Wise, kind of got me involved in learning a little bit more about non-QM, and I said, this is the way to go. The future of the loans is non-QM. So I said, I need to get out of aid paper because today, with the way the environment is, we need to be able to do investor cash flow loans, DSCR loans, bank statement loans, so it was a great change.
And how's that going?
It's going really well. The bank statement program is my #1 program. Investor cash flow after that, if you can see a DSCR, it is a #1 loan for investment properties. It's really great.
Okay, so bank statement loans, is that primarily for owner-occupied properties?
Owner-occupied and investment.
Owner-occupied investment properties.
And investment properties as well. You can buy an investment property.
So tell me, how does it work with investment properties?
So it's a 12-month bank statement at a minimum.
Yes.
You have to just meet the minimum requirement for a down payment.
Yes.
But it's the same thing as an owner-occupied.
Under what circumstances would you advise somebody to do bank statements for investment property as opposed to DSCR?
The rate can be a little bit lower on the bank statement loan if you qualify for bank statements versus the DSCR, because DSCR is no income, no employer. So that rate is a little bit higher.
Okay.
But not in all cases. It depends on the loan to value and
Yes.
the FICO score, if that actually is the case.
Okay, I know that some lenders have no ratio DSCR. How about you guys?
So we do, as long as the FICO score is 700 minimum and the LTV is 75% and below,
Yes.
we can actually do no DSCR, so we allow that.
Okay, cool. I hear that you guys are '1 in the nation.
We are the largest non-QM lender. We absolutely are. You do loans with us, right?
Yes.
So what we offer, we have the actual product down. We've been doing this for many years. The rates that we offer, we have an operations center in Atlanta and also in Dallas. We have a great team. I think that anybody out there doing non-QM loans knows that we stand behind everything that we offer.
So some lenders offer 3-month bank statement program. Do you guys do that?
No, we do not. We have
Why not?
Minimum we do is 12 months.
Okay.
We believe that we need to see at least a minimum of 12 months to show that there's actual deposit income coming in every month for a minimum of 12. That way we know we have a borrower that's continuously making enough money to support the house.
So, okay, I've priced some loans between 12 months and 24 months,
Yep.
and sometimes there's no difference in pricing.
An eighth better if you go 24 months.
Okay, I see, cool. So what's your LTV?
We go up to 90 on the bank statement program.
Okay, up to 90. Okay, now the question I have for everybody, for the gig worker, okay, what is the expense factor? You know, a lot of people drive Uber and Lyft, and some people have this Airbnb and all that kind of stuff. So would you fund those people?
So our expense factor is typically 50%.
Okay.
But it's depending on the business.
Yes.
So if it's somebody like, for example, a CPA that's working out of their home, they don't have office space, they don't have overhead, we can work with them on giving them less of an expense ratio. We would require a CPA letter or a tax preparer letter that shows what the expense is, and then we'll give them more income.
Okay, so
it's case by case.
that's a CPA. Now let's talk about somebody's driving Uber.
Yeah.
What they're getting from Uber is exactly what they're getting, right? So why are we going to expense that at 50% as opposed to, let's say, 10%?
Because we actually, every company that's out there needs to be able to provide something that shows what the expense ratio is. So if they can't provide what the expense ratio is, we're going to do a flat 50%.
Okay, cool. So who has to provide that? The company has to provide that, or you guys have to?
No, what we do is we take the 12 months bank statements and we calculate the income, the deposits that are coming in. We do a worksheet. We come up with an actual dollar amount based on the 50% expense ratio, and we use that dollar amount to qualify. If they can provide a tax preparer letter
Yes. Okay.
or a CPA letter, then we can change that expense ratio to possibly 30%, depending on the type of employment we're talking about.
Okay, some lenders right now, they have a technology whereby you don't have to send your bank statements to the lender, okay, to calculate, and maybe you have to wait 24 hours, but they just have the technology. How about you guys? You're the biggest in the nation.
We actually are working on technology very similar to that. It's
Okay.
not up and running yet, but we're really close to being able to do something like that.
Okay, thank you so much.
You're welcome.
Is there anything else you'd like to add to our audience here?
Angelo rocks.
Good, thank you so much.